This is the MTPredictor weekly market update for May 4th. Alright, so I've got the monthly chart of the S&P here, and I've taken a decision point off of the prior swing here. This was our major monthly decision point resistance. And you can see we've started to trade above this level. It gets into an area, if we get too far, it's going to be what we call decision point or trend continuation. What we'd say here is we may get a little like a wiggle pullback and then maybe on to new highs, but let's just look at the weekly chart here, because this is what we're also looking at on the weekly chart. We've been in this pattern for a while here as we hit the minimum wave 5 resistance, and again, it's an area where the market could correct, and we can take our decision point off of the wave 4 swing low here, and this would be a target. Let me move this level over here as we know that's there. But we got that sell-off. Then we anticipated the rally into Easter, and I'm not going to be surprised. Again, there's that 1900 out there right in the typical wave 5 target area, so we can still be in wave 5 anticipating a top, but still rally higher into that nice round number there. Okay, I mean, we can fall right from here because we're in the minimum wave 5 target, and the tendency is we get a correction back to this level, which would be around 1711, 1715 area. All right, but typically this we call typical wave 5, because this is typically where wave 5 comes to an end or unfolds here. So 1900 is a big, nice round number. The market likes those, so I won't be surprised if we hit that level before we get any type of corrective action here. But we can see we've been consolidating for weeks now in this area. We talked about getting false breaks. We got a new high here. It was basically a false break to the upside, and then the false breaks to the downside. We've seen a lot of that in this area. It'll get resolved. We got the Fed meeting over. The Fed will continue to taper, which means in their point of view the economy is still improving, and so remember we had that Dow theory confirmation a few weeks ago, meaning that the bull market is still intact, and basically that corrections can be bought as that trend is still intact. So I would anticipate if we do get a nice healthy correction that professionals will step in and buy that at some point. We'll see if we rally first here into 1900, take some more people into the long side before they drop things from here. Okay, but if you're going to attempt anything, again, low risk, high reward scenario is what we're going to look for. And then on the daily chart here, again, this was that when we reached this level, we anticipated, see, we had the high volume spike here. This high we took out, that was the new high. We took out the prior swing highs here. The high volume told us basically that professionals were trapping those breakout buyers in here, and we're going to reverse things. It was confirmed with the red sellers candle telling us that sellers were overcoming buyers. And then we looked for the support area on the other end, which was a decision point here. And this is where we anticipated that buying should step in. We closed that week with a blue buyer's candle. That's where they reversed things. We anticipated this rally into Easter, and then we said, let's take a look at after the holiday. Let's see how the dust settles. There's a TS1 sell signal. It's not what we call a standard trade setup because this STF is blue, which means a larger degree trend is still up. So our new traders would avoid this. But again, based on the weekly chart, we are in an area where we could correct, and it could be from here. Like I said, it could be up around this 1900 level. But the market is certainly due, and we've looked at the internals. We're about half the stocks that make up or sectors that make up the stock market now are in negative territory for the year. So the internals are starting to look a little shaky. So again, be on your toes, especially if you're long again, your pensions and 401ks and all these things are only geared to make money when the market goes up. All right, let's take a look at well, let's look at silver, because we had some important developments that we've been following here. Let me just stretch out. This is the daily chart here, and we had a 5-wave pattern coming down initially into the minimum wave 5 on high volume, and we talked about if they could take out this blue buyer's candle to the upside, then it would basically be confirming that this may be professionals stepping in and buying this, and we would be looking then for the about 2060 level. If that gives way, then we'd be looking up around the 2250, 2260 level, which would basically wipe out this 5-wave pattern down. So this Elliott wave pattern here is where we anticipate some type of corrective move back into this area. It didn't come here, as we saw the high volume, never able to take out that high. We'll look at the weekly chart as well. Instead rolled over into the typical wave 5. So again, this is still an area. We got buyers overcoming sellers right in the typical wave 5. They took that candle out here, and we've begun to rally. So this 2060 level will be a target for the day chart. Well, if we want to look at the risk reward on it here, let's just see. Don't know if there's enough. Oh, this is off here. I don't know why this is. Clear that off. My offsets are off there. Don't know why, but I'll look at that later. But anyway, this is the anticipated area that we should correct to, around that 2050, 2060 level. The only thing that concerns me, and we'll look at the weekly chart, is the high volume that came in here. We ended up making a new low. And usually, if this is professional stepping in and buying, we shouldn't have made a new low here. It's because we have a pattern here, it's, we're still in an area where we anticipate a correction because we're in the typical wave 5 support, but it didn't come here. They weren't able to take it up from the high volume spike. So I'm not sure. I mean, we still have high volume coming in. Let's look at the weekly chart. All right, but you can see on the weekly chart here, kind of our bigger picture. Actually, let's bring in the, we had that 5-wave pattern up with that $50, nearly $50 high there. We anticipate a correction back to the wave 4 DP. Okay, this is the level that we corrected back into. And so far it's holding as support. If it continues to hold as support, then the trend which was up prior should continue up. But we did have a pattern here. Here's your wave 3 into wave 4. Here's the minimum wave 5 target here. The high volume, here's your weekly high volume spike. Let me expand this so we can see. But again, here is your blue buyer's candle. So we would anticipate that if this is professional stepping in and buying here, that we were looking for the this weekly blue buyer's candle would be taken out to the upside, which would coincide with that move on the daily chart. But it didn't happen. Instead, we made a new low here and closed the week on a neutral candle. So this is potentially, this could just be selling, more professional selling coming in because of the new low here. We'll have to see. Again, if you're short, you've got your protection. You can't lose. You're in a risk-free trade here to see if they can get down to this on the 1760 level here to the wave 5 target. But this bears watching. If we do end up taking out the highs here around 1990, all right. In fact, if we go back to the day chart here, remember that target here, this wave 4 is around that 2060. So if they take out the weekly candle high there, it means we should be heading into this daily decision point target off the wave 5 pattern. If this holds as resistance, then this trend, which was down here, should continue down. But if they take this one out to the upside, then we would anticipate this daily wave 5 pattern down get erased, and we'd be looking for this next target. So it's possible again that a low has been put in and it's going to be off. If they can take this level out, now we're looking at 2260, 2250 level. All right, it's definitely possible. I did buy more silver last week, actually bullion in case. But if this holds as resistance, then things may roll over again here if we can reach this level. So we'll have to see. So far, the blue buyer's candle here off the typical wave 5 has been broken to the upside last week, and so a tendency is we can correct back to this 2060, 2050 level. So we'll see how that unfolds. All right, we'll wrap it up here. Full week of economic data here. Just keep in mind Wednesday, if you're going to be day trading, that Janet Yellen will be speaking at 10 o'clock Eastern time, and that might be some market moving stuff. So be aware of that. Otherwise, we'll take a look and see if we've made any progress in these markets, and we'll review it next week. So have a great rest of your trading week, and we'll see you back then.